So how do you make this work? I'm earning 3 to 5. I said you can earn 3 to 5 and only pay 1 to 3. How do we go about doing that? Okay. The guy in the TikTok video doesn't know. I can tell you that much. The brand new life insurance guy doesn't know. The person that's all hyped up with their, their agency team and they're all rah trying to recruit you, they don't know. Okay. The way that you do this is you pay your loan back. This is a line of credit. Just like the dividend is a gross rate, this 5 to 6% interest is also a gross rate. When I pay down a line of credit, I'm reducing the principal balance of that loan every month, meaning every month the interest is now calculated off a smaller number, meaning I pay less dollars. 6% of 5,000 is less dollars than 6% of 10,000. So logic stands to reason. If I have a $10,000 loan and I pay it down to 5,000, I'm not paying 6% on 10,000. Okay. I'm paying 6% on 5,000, which if I take that number and I divide it by the original loan amount, that's going to be about 3%. Okay. So I am earning 3 to 5% on the entire 10,000. And now if I pay my loan down and off over time, I'm reducing my principal balance and my interest is being pulled off of a smaller and smaller number. And because of that, my net interest cost and my net rate of return. Again, we can't compare a gross number with a net number. It's gross to gross, net to net. The gross dividend is 6 to 8%. We already know we're not going to get that. The gross interest rate is 5 to 6%. If I don't repay my loan, yes, I will pay that. So if I repay my loan over time, then I'm comparing net numbers to net numbers. So now I can look at, okay, it's 3 to 5% net, 1 to 3% interest cost net. Okay. Now I just said, if I pay it from 10 to 5, it's like 3%. So how do I get this even lower? How do I get it to the 1 to 3 range? There's something called a cash value line of credit. I can actually go to a certain lending institutions and I can get a line of credit against my life insurance. And they're typically going to charge a 3 to 4% gross interest rate. 3 to 4% gross, meaning if I pay myself back, guess what? This is more like 1 to 2 net. Okay. Not only that, if I use this for a business expense or an investment, this number can be deducted on my taxes. So now I'm having the government subsidize that. If I'm in a 30% effective tax bracket, I'm paying only 70% of that number because Uncle Sam is covering the difference. See, so there's a lot on the back end of this. It's not just watch the TikTok or the Instagram or the YouTube video, hear all the hype about tax-free dividends and borrow your money and get arbitrage immediately, and then stick money in there and take loans and the money machine just pours out. No. This is a process. This is a system. Okay. So the infinite banking concept is what's being touted. Everything I just mentioned, get your 6 to 8% dividend and your 5% interest rate and borrow and make positive arbitrage. And I'm telling you that that's not real. And unfortunately, that's what the infinite banking concept has become. When you Google it, when you research it, that's what people are saying. That's why we don't call it that. We call it the sacred account.
If you're wondering, what does Wealth Dynamics do? How can we actually help you? Number one, if you haven't gotten a copy of my book, Blueprint to Financial Freedom, grab one now. You can get that down in the comments in the video. You can get the link for that. Number two, we do a free course on Fridays on personal finance. Okay, you can also get the link for the description there too. And then finally, if you have a desire to start getting help walking through these different phases toward financial freedom, book a call with my team. Go to our website, set up a call. We're able to help out and answer questions. That's how we can help you. Thank you for watching. Like, share, subscribe. Make sure you turn notifications on, and I will talk to you guys on the next video.